Alrighty, folks, if we're going to talk housing, there is no better person than Lance Lambert from Fortune. I think there's two things we must talk about. One is inventory, one is inflation. Lance, man, lots of stuff going on. How are you and baby Leo?
A lot going on. We have Leo here. Say hi, Leo. You gonna wave?
Hi. You're so cute.
To get up here again. And now that we've done these segments, every time that he sees me play a video, he's waving to people.
I
And I've
love it.
watched a few of your morning updates, your 5 things, which I love those 6. And he's waving the whole time to you.
Oh, that's so sweet.
He likes when you get the dog up.
I'll do it just for him. Thank you. So you're
Uh,
going to bring up some inventory information. Is that right?
Inventory data. Yep. Do you want me to go ahead and share my
Yeah,
screen?
share it. Let's do it. I think this was very, very powerful stuff.
So I'm a little dated on the data, just slightly. But it's the full month of March, and I won't get the full month of April until early May.
Of course.
I pulled the publicly available Realtor.com data, and if anybody wants to pull it, all you need to do is Google Realtor.com data, go to the monthly data, and you could download an Excel file with all the data.
Yep.
And so what it shows is that new listings, we'll start with new listings.
Okay.
March are
Wow.
there's not much.
No.
There's not much. And actually, this is a true story. I was outside mowing yesterday and somebody stopped me. They had driven down the back of our road and they were going slow. And the woman stopped me and asked if any new homes were up for sale in the area. And she was like, I really like some of these newer homes in the neighborhood. And I told her, yeah, there's nothing. There might be a plot of land nearby that one of the builders might put something on eventually.
Right.
But when I log into Realtor.com and the screen that it shows me initially, there's not a single listing around.
Yeah. This is one of the things that I've been pushing for several months now. Obviously with you and Logan, I believe the spring housing market is going to land like a thud this year and next year. I don't think we're getting that surprise increase that we've seen historically, going back 40 years. And thus far, it hasn't shown up. But maybe it will.
And the jump that we did see in inventory last year, the jump in quotes, but
yeah.
So you see the new listings for March way down. The historical trend is there, and you'll see that in any type of housing data. There's always the rhythm of the market. So it started moving up in January, but you just see there's not much there. And the difference between this dot and these dots, that's the churn that's gone. The people selling a home, buying a home, they're
Move
gone.
up buyers. Move up buyers are gone.
And it disproportionately impacts the first time buyer because that's a lot of the homes you're putting there, and it disproportionately weakens the demand at the top half of the market. And so you see there's the market with the new listings. You did see that new listings went down in April 2022. That's when the pandemic initially hit, which was kind of bad because you had it go down and then almost out of the gate demand took off. So that was kind of a little bit of a bad misbalance to start off the pandemic housing boom. And so here's inventory. Inventory continued to move down in March. In the Realtor.com data, inventory, if you squint here, it usually kind of bottoms February historically and moves up into March. So we didn't see that historic move there. And if you look at it very closely, the only year recent that you could compare it to trend-wise is really 2021. It's not a great year to compare it to.
No, it's not.
In there. So it looks a lot like 2021. 2021, I don't think it didn't bottom until April. So it went down further in April and started its increase in May. That's what you would like. And if you go to 2022, you see that it started off much lower to start the year, and then moved up once mortgage rates went up, and then saw its typical historic or its normal seasonal decline at the end of the year. Mm-hmm. But what that really is that yes, there's a number here for inventory, but there was no inventory in 2020.
No.
Home went off the market, home went off the market.
Exactly.
And so stopping the frenzy moved inventory up, demand pulled back, homes actually started to sit a bit on the market.
Yep. Days on market grew. Yep.
So what caused inventory to move up last year was not market homes coming on the market.
No, days on market extended.
Days on market moved up. Days on market, which I should actually do a chart for it and do it regionally, his went down recently.
It's rolled over, correct?
It's, pretty sharply, actually, the March one. And to get inventory into its seasonal upswing, you need the decline in days in market to stop while new listings continue to move up in the spring. If you want inventory to spike, what you need is new listings to either keep rising, but you really need days on market to not only stop falling, but to move back up sharply.
Yeah, it needs to go the other direction. Exactly.
Really, what you would need to get inventory moving up quickly here is 7.5% mortgage rates.
Oh, we've learned it. I mean, I have top agents on my.
It might not even be 7. It might need to be over the 7. You might need to test a new mortgage rate shock to really.
Totally agree with you. I totally agree. I mean, we've learned.
Yeah, and even then, anything that it does, it probably falls back on itself. And so inventory moving up last year gave a window for prices to come down a bit, right? Because it was so pressurized. But the runway of the decline has been stopped by the decline in inventory. It didn't create a big enough window. And so if we keep scrolling down further, here's year over year. You'll see inventory has moved up on a year over year basis, essentially everywhere. Although this upswing happened last summer, not anytime recent. And it was essentially because the market finally was homes actually started to sit for a second on the market and they weren't just flying up. And so that's what put up inventory. And you can see that inventory rose the most in the Mountain West, Southwest, parts of Texas, some of the Southeast, and then Florida. The Northeast and the Midwest, it's, they didn't really get much of a swing. And I think I posted the Milwaukee chart the other day. Somehow Milwaukee's inventory is worse now than it was in 2022 spring.
That's wild. Significantly worse.
Yeah. Yeah. I mean, there is no inventory in Milwaukee. And it's this whole cut of the US right here. And then right here is just very tight. But then if you zoom out and you have the perspective of what it's looked like from now to pre-pandemic.
Oh my goodness. Compared to 19, oh, that's not good. That's a lot less inventory.
Everywhere that is this red is down 50% at least.
Can you try to find Fresno? I think it's that little one, Fresno, California. I think it's up there. One more. There it is. 52%.
Yeah. From
wow.
And that's March 2023 to March 2019. And the reason I don't use March or I don't use 2020 as the comp is that,
of course, yeah,
so many more of the months later in the year, it was the pandemic year. So I don't.
Oh yeah, 2020 is not a housing year. Yeah.
And there's really just only a few parts of Colorado and some of Idaho that are above pre-pandemic. Now, as we move into the year, you'll probably see Boise and some of these again, maybe cross over that, because you're using a really rough comp of the March comp. And
I think this is a beautiful chart. I mean, comparing where we are today to 19, thinking we're getting back into a quote unquote normal housing year, this just shows how we are still not there.
Yeah, there's no inventory. Yeah. And I mean, even in a place like San Francisco and Seattle, markets where I don't like to use the words crashed for those markets because it feels weird to me a place crashed and tight supply, but I call them sharp corrections.
Oh, for sure.
There's still no inventory in those markets. It's interesting. And then here's the chart here, and you can Google the story and find it. It's behind the paywall now. My stories usually go behind the paywall after 24 hours. Home sellers go on strike if you want to see the interactive charts. But right now it's behind the paywall. And we could go through a few of these markets if you want to see them.
Yeah, go for it.
Let's see if it's going to load here. Why isn't it working?
It may not. Zoom may not allow you to nest them, maybe.
Oh,
slow. There it is.
What market do we want to see?
Well, I would love to see Fresno, California, because that's where I play.
So Fresno.
Yep, that's what I would expect.
The interesting thing about Fresno is Fresno's inventory here. Okay, so what happened in Fresno? This is interesting. Mortgage rates moved up in 2018.
They did.
It creates a little bit of an uptick in inventory. Not much.
Yeah.
Mortgage and that 80, I call that a baby shock. That
sure.
Mortgage. And then mortgage rate and then inventory kind of normalized back here. But this is interesting, is that even before the pandemic started, for some reason, Fresno had a very sharp decline in inventory at the end of 2019. And that's interesting. So it came into 2022 or 2020 already pretty hot. I mean, you look at that 1159 versus, 13, you have about 200 fewer homes than normal.
Yeah, what was happening back then, again, I've been looking every day for 20 years, is Fresno was remarkably more affordable than other parts of California. So they were just starting to see migration from other parts. And then obviously the pandemic just accelerated that like nobody's business.
Pandemic hits.
Boom. Look at that.
You go up in April for just a second, head fake. Boom.
Head fake, but exactly.
Really far down. And then that's not really inventory. 484.
No. It's 1 million people live there, man. That's nothing.
I don't know what you call this. 480. I mean, that's just the market, the homes going on the market and having a little bit of a second to register as inventory. And then
that was agents giving you 3 days to hold, to do offer review dates. That's what that was.
Mortgage rate shock. Yep. Guessing the market felt kind of weak here.
It felt that, yeah. Yep.
Yeah. Pretty big transition. Nothing close to prior inventory. And then speedy decline.
Yeah, and it's really funny. This is something that's important to me, right? It says 774 there, but like you and I've talked about privately, a lot of that are luxury homes. We are seeing in my market luxury stack up. So I'll tell you, the 774 feels worse than the 528. Because again, there's inventory differences.
That does make sense. And I mean, in a lot of these you see people talk about it all the time. The things that they want aren't really there. And the things that do come in the lower half of the market, and if God forbid it's in a good school district or a nice home, it's going to be competitive. Yeah. So when you look at some of the headline housing data, like mortgage purchase applications, you have to be a little cautious in how you read it. Right now, it shows that it's way down, right? And so I call that constrained, because you've essentially taken off a whole segment of the market, which is the move up.
Yes.
But the balance of the market, and especially in the spring, has gotten it to where it's not just constrained, it's competitive in a lot of these places. It's the 2 C words. Exactly. And you can't really see that equilibrium move just looking at some of this data. You have to take a lot of it in to see it. It's tricky to read. And, you have some of the worst actors on on some of these YouTube channels who
yeah, pretty bad.
Just some of the data, but you have to take it all together, and especially down to the market level.
You mean Lance, you can only take one metric and not compare it to there's one creator out there who takes the cost in one state, tries to compare it to the cost of another state and say that this is a problem. I mean, talk about single variable, single threads, point in time nonsense. It's crazy what people get away with on YouTube.
And and one of the things that people came after me last year was that I would use seasonally adjusted data to show the peaks from decline. Some of the people were using median list prices to show the peaks from decline. And the thing about median list prices, and maybe this is less of an issue out in California, but especially in the colder markets, there's a huge seasonal drop every year. Like every market has a drop, but somebody got mad at me because I put that I had, Phoenix down closer to like 9, 10, and their data was showing like 12, 10. So we were pretty much in the same ballpark. But for Chicago, I had Chicago that I kept showing, which is either the Schiller seasonally adjusted or the Zillow down like 1% from peak. Well, they had it down 17%.
Oh my goodness.
And I went and looked at it. Every year it's down that much.
Exactly. The people don't like to buy in the winter. I mean, that's pretty obvious.
Yeah. So so the reason that was important is that some of those people have been surprised by the strength of the markets that were down closer to 1% or 0% on a seasonally adjusted basis in the second half. And what it is if a market was down less than 1% or 0, that market was still very much probably in growth mode. They weren't in the market. They were kind of frozen there. So Philly is a great example. Philly never declined in the second half of last year on a seasonally adjusted basis.
Right.
And now it's having pretty strong appreciation. And so I think what we're kind of seeing in some of this data is that there are some true down markets, and there are some true up markets.
I agree.
And I don't know what that's going to line up on the national data exactly, but it's looking right now, at least on the Zillow Home Value Index and some of the others that we've gotten more of the data, it's looking like a sideways year.
Yeah, it's a push. That's funny. There's some great creator out there who actually called that back in January. We don't need to name him, but people know who he is. I'm just playing.
But there is a risk of we get the April, May data comes in strong.
Sure.
Rates come down.
Oh, if that happens, yeah, that's
there's no rules here, right?
No.
There's no hard rules where we can't stay at these rate levels, appreciation strong, and the rollover doesn't happen in the second half of the year at all to take off those gains.
You're right.
And that would probably be dependent largely on the supply side. If inventory really struggles here, the market tightens up further. But the data is, we ran through the data on these segments. The data looks very different. There was a very big shift to December to January in the data, and it is slowly making its way to the price data.
Yeah, it's going to be awesome. Well, folks, do yourself a favor. Follow him at News Lambert. You see it there on the lower part of your screen. And really, really do yourself a favor. His articles come out. They are a must read. They are, in front of the paywall for 24 hours. So please, please, please read them. Then they go behind the paywall. Lance, thank you very much. Hi, baby Leo. Bring him back next week. We'll talk next week.
Yep.